Hey everyone, Simon here. Welcome to your Daily Insights video for Friday, the 21st of May, 2021. Happy Friday to you. And the markets were looking a little happier on Thursday as well. So I've got a chart here of the S&P 500, and there are some developments here that I think are worth pointing out. I may even just zoom in a little bit more, and I'll just show you what I'm seeing here. So we've got a double bottom here, all right? And we've got a double bottom against a rising 50-period simple moving average. We also had yesterday, Thursday's session, a nice little hammer candle. Oh, sorry, that was day before. That was Wednesday's session, a nice little hammer candle. And then yesterday on Thursday, we closed above the 21 EMA. All right, so this is all quite bullish. Now, if we can close above the 21 EMA again today, Friday, I think the S&Ps are very good chance to make new highs by, first or second week of June. How high? Well, let's just run some fibs from the all-time high to the swing low, and I would be looking for a 1.272 extension, which is, oh look, 380 hours above the mean. But that's going to bring us up to around, call it 4280, call it 4300. I mean, that's kind of the nearest round number. So I think things are shaping up quite nicely here for the S&Ps. And it's kind of the first time in a little while we've been able to say that. Now, you might remember last week I talked about the pit bull low, which is you take the Thursday or Friday before options expiration, the week before options expiration, and often that will be the low point for the market. If we come back and have a look, I mean, the low was actually the Wednesday before, but you could call Thursday kind of your pit bull low. We came back and sort of retested it on Wednesday, but generally, erring on the side of bullishness the week before options expiration works more often than not. It doesn't work every time. Nothing works 100% of the time in technical analysis, but that works about 70% of the time, which is why my portfolio has been long biased, and I haven't even had any hedges on the last few days. So let me just get rid of that drawing. I'll reset the chart. Let's have a quick look at the triple Qs, which represent the Nasdaq. So the Nasdaq has been obviously the real problem child of the major indices. And what we've got here, nice little double bottom. I want you to just remember that pattern, and a close above the 21 EMA. All right, so the Nasdaq has mean reverted from the downside. So the Nasdaq is not out of the woods until we get two closes above the 21 EMA. And even then, I'll feel a lot more comfortable when the 8 crosses back above the 21. But if we close above the 21 EMA today, Friday, I think that puts the Nasdaq in pretty good shape as well. Now, is there anything else that could help the Nasdaq at this point in time? Well, let's have a look at a couple of things. Now, it is options expiration today, so let's have a look at the triple Q's option chain. And what we can see is, if we just scroll down a little bit, I'll just keep scrolling to make it a bit easier to see, is a whole stack of puts at the 330 strike. All right, so they are expiring today. Now, the market makers who've basically been selling these puts to probably retail punters who panicked and just started piling Nasdaq puts on as it started selling off, are going to do their darndest to see those puts expire worthless. Now, it's true that there is some pretty decent open interest in the calls, but the put open interest is 50-60% higher than the call open interest. So what do the market makers do? What want to do? Ideally, they would want to see the triple Qs close a cent above 330 and have all of those puts expire worthless. Now, if the Nasdaq, if the triple Qs close at 330 or just above, that is going to give us our second close above the 21 EMA, which is that is our first sign that the trend is potentially reversed and we're going from a downtrend back into an uptrend. The other thing that can potentially help the Nasdaq here, of course, is bonds. So TLT was stronger overnight, up 82 basis points. Not a huge move, but certainly a move in the right direction for tech stocks, and high beta tech in particular. If we have a look at TNX, you can see TNX was a little bit weaker. again, not a huge move, but a move in the right direction. So, you know, some of the things that I've been talking about for the past week are starting to kind of play out. That is, parabolic moves in commodity prices correcting, and that correction in commodity prices, and it's been fairly sharp in the case of things like lumber and corn, is perhaps just taking the gas off the inflation train. And whether that's sort of temporary or you know, very short term or kind of a medium term remains to be seen. But if it takes some of the scare out of the inflation story and bonds start catching a bid, I think that high beta tech is going to have a huge short covering rally. Now let's just go through and have a look at some of these kind of beaten up tech stocks. I'll just zoom out a little bit here. Let's start off with the big boy Apple. So what's Apple doing? Well, we've got a double bottom against a rising 200 period simple moving average. All right, that is usually not a bad setup. You've got a little kind of Dow theory 1, 2, 3 reversal here. As soon as we get a close above that peak, that really puts Apple in the green light. Apple can, you know, have a decent move to the upside. Let's have a look at the number 2 stock, Microsoft. It's interesting, isn't it? See what I'm seeing? We've got this double bottom here. This time it's off the 100 period simple moving average. We're starting to see a little 1, 2, 3 reversal happening there. We've still got a little bit of ground to cover to make up before it gets there. But if the Nasdaq's going to do it and Apple's going to do it, then Microsoft is most likely to follow. Let's look at some junkier stuff like Tesla. I don't mean to insult Tesla, but you know, it's not what you'd call a quality blue chip stock. But this is kind of interesting as well. Again, we've got this sort of double bottom pattern here. Now, it didn't quite hold the 200-day EMA, but these double bottoms are appearing kind of all over the place. Now, I'm not bullish Tesla. I mean, this is not a chart to get all bulled up on, but I think it's a very good chance to rally back to the mean, all right, which is kind of around 630. These are trend reversal setups, okay? So if you look at the MTF chart, it's going to look really bearish, all right? We've got red kind of everywhere. Okay, the green's still monthly, but you know, monthly charts are long term. The 30-minute has turned green, and that's a symbol that maybe the selling is easing. But from a trend perspective, there's no way you'd be in any of these, and that's exactly what I mean. We're not following the trend here. We're looking for a trend reversal of this double bottom, and you know, if it can reclaim the 200, that's a kind of a step in the right direction. Once it reclaims the 8, sort of target the 21. So still arguably early days for Tesla, but this is a pattern that I'm kind of seeing come up a lot. Let's have a look at Square. So Square, I've got a put credit spread in place, which looks like I'll be able to buy that back pretty soon. But again, we've got a double bottom, well, actually a triple bottom in Square here. It's almost managed to reclaim the 200. I think that this one is a very good shot at a run to 220. Let's have a look at Baidu. Why would we look at a Chinese stock? Everyone hates Chinese stocks. Well, sometimes when something's hated, you know, it can have a short covering rally. So again, we've got a double bottom against a rising 200-day simple moving average. Yep, the trend looks awful, but could it mean revert? You know, could it? Well, actually, you could argue it already has mean reverted. Okay, so maybe Baidu we leave alone because it's actually trading pretty close to the mean. MasterCard. Trend here doesn't look awful, but it's not clear. We've certainly got red momentum bars, but again, price has kind of found support at a support level, and it looks to be reversing off support and the 100-period simple. If we look at Abbott Laboratories, you know, look where price has reversed. We've got this double bottoming kind of pattern and a nice move up. Yesterday, it's reclaimed the 8-period EMA. It probably looks set to at least mean revert as well. Abbott Laboratories is in the pretty strong XLV sector too. Let's have a look at ICE, Intercontinental Exchange. That again has found support at a support level. You know, if you look at where it's kind of bottoming, it's got something in common with where it's bottomed in previously. Didn't quite make it down to the 200-day moving average, but it doesn't always have to. You can see we got very, very close to 3 ATRs below the mean. which is something that it doesn't do all that often. And when it does, it usually has a pretty decent bounce. All right, so ICE, keep your eye on that one as well. Let's have a quick look at Intel, which I've got a position in, and for the same reason, 380 hours below the mean. Normally, when Intel gets 380 hours below the mean, it will have a bounce. And in this case, we've got a double bottom, almost a triple bottom, off the 200 period moving average. All right, so Intel looks like it could, at the very least, mean revert. Starbucks was another one that I had a look at. And again, what we're seeing here is a double bottom and then a reversal back up. Now, again, the trend here is nowhere near as beaten up as something like Tesla. But you know, I would think that Starbucks is probably good to rally off this sort of level as well. All right, none of these are classic setups. They're certainly higher risk. And you know, they're trend reversal. We're kind of bottom picking, which is something I do preach against 95% of the time. But when there's a kind of macro play helping us out here with the potential for compression in bond yields and a rally in bonds, that's really going to help out some of these high beta tech stocks. Not that Starbucks is a high beta tech stock, but I'm just pointing out that we're seeing these kind of little double bottoms manifest all over the place. And then if we want to have a quick look at some of the real high beta stuff, I mean, Peloton has probably been a poster child for that. And this has actually put in a pretty solid base here, you'd have to say. It's actually already mean reverted. But there's a whole bunch of other stuff out there that is worth a look. You know, Alibaba got to 380 hours below the mean. That's probably looks set for mean reversion. You know, Disney doesn't look as beaten up as some of the others, but it is 380 hours below the mean. All right, and from that level, it's probably due to at least rally back up to the mean. We could look at something like Twilio. So Twilio used to be one of my favorite trading stocks. This was a great stock in 2019, 2020. Trend here is kind of a bit more beaten up. We haven't really got the same sort of double bottom pattern. But you can see it was up 6% on Thursday, and this thing looks like it wants to push higher. Pinterest, you know, I'm half tempted just to buy some calls in this name. We haven't quite got the sort of double bottom pattern that I've been pointing out in some of the other names, but it looks like it's reclaiming the 200-day, having been 380 hours below the mean. You know, Chegg. All of these stocks are showing signs of life after hitting 380 hours below the mean. Etsy would be another one, which has just reclaimed its 200-period simple moving average. So, you know, there are potential opportunities there if you've got a higher risk appetite and you don't mind sort of getting your your fingers burned. The way I would play any of these, if you know that is your cup of tea, would be either by selling a put credit spread, where you're just taking a not bearish stance. So you're still giving yourself room for a bit of downside and collecting premium on a theta positive trade, or through a cheap butterfly where you're risking the premium paid. There are no tears if it doesn't pay off, but there are big smiles if it does. So I mean, there are a bunch of setups here that kind of look tempting. I mean, the one that I quite like is Square. I just think it's kind of probed this level 3 times. It was previously an area of resistance as well, and it looks like it's having a decent crack at reclaiming its 200-day moving average, which is still rising. And so what I'm looking for is a way to say, well, how do I play Square rallying back up to 220, all right, which is roughly where the mean is. I'm not by any stretch thinking it's going to make new highs, but I do think it's a good chance to rally back up to $220. So what I'm looking at here is a butterfly. I'm looking at 4th of June expiration, buying the 210 calls, selling 2 lots of the 220 calls, and buying the 230 calls. So this is how it's going to look. So 4th of June. So all of them are out of the money. So this is definitely a lotto ticket. And then buy the 230, and you can see that's going to cost around about $1.50. Let's see how that looks in the analysis tab. And you can see here, so we're risking $150 per contract, to potentially make sort of $850 per contract. All right, so the risk reward is pretty nice. Now, as I've said repeatedly, a hell of a lot has to go right to realize the max profit. Basically, Square has to close at 220 on the 4th of June. But could this be a 2-bagger or a 3-bagger? You know, absolutely, if it starts to mean revert. You might remember I talked about the Google butterfly last week. I didn't write it up because I thought, you know, it's a bit high risk. But I did take the trade, and I mean, I think that it cost me $2.20. I exited that trade yesterday for $8.39. So that's, you know, virtually a 3-bagger. Well, virtually a 4-bagger actually. And it's the body of that butterfly was 2,300, which is why I sold out of it yesterday, because once it gets through the body, there's kind of no point hanging on, particularly if the Nasdaq looks like it might have a bit of a push into options expiration. All right, so that's a trade I like in Square. Like I said, it is higher risk, risking a premium paid. You know, just be sensible with your position sizing if you're going to do a trade like this. Okay, what about normal trades, conventional trades? Well, I mean, there's a few of those around as well. HCA looks pretty good to me as a bounce. Let's just put my bounce screen back on. So we've come down, we've wicked the 34 EMA, and we've closed right in between sort of the 8 and the 21. We've got green momentum bars, and let's just have a look at on multiple time frame. I mean, they're green, 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 green. So, and they've turned green here. So, I mean, that looks great. TAP is another one that I quite like the look of here. Let me just get rid of those drawings. So TAP, we're green, 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 red, red, green. So the 78-minute and the 130-minute charts haven't turned green yet, but the 30-minute chart has, and all of the higher time frames are also green. So just looking at that on the daily chart, we've got a you know, a valid bounce set up here. So TAP is one that I quite like, and it's part of the XLP sector, which is looking pretty bullish here as well. So what I like in TAP, I'm looking to buy the 16th of July 52.5 calls, the Delta 73, and I'm just looking to kind of get set at mid. I'm not looking for you know, an extraordinary pullback, because I think the price is pretty fair in between the 8 and the 21. If we have a look at that on the ATR chart, you can see we're pretty much right at the mean. In terms of kind of squeeze setups, there are a couple that caught my eye. X-ray is one that I do like the look of. We're only just into a squeeze here, though. We're only sort of 1 bar in. So it's one that I'd like to keep an eye on, rather than kind of fire any bullets today. But a couple of other, well, one other thing to note here on X-ray is that a monthly squeeze fired 3 bars ago. All right, so we've potentially got a nice kind of tailwind from that. Another one that caught my eye was WRB, insurance company. It's in the XLF sector. Here, we've got a daily squeeze that's been going for a little while. I'd like to see momentum perhaps start to shift. It is trading at the 50-period simple, so you know, potentially getting good entry there. And from an MTF perspective, we're green, 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 green on all of the higher time frames, and we've got a monthly squeeze that fired 2 bars ago. All right, so potential tailwind there as well. Another one that caught my eye was GMed, Globus Medical. So we're 6 bars into a squeeze, so that's long enough. Momentum is positive. It's trading at the mean, and from an MTF perspective, we are green, 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 green. And we've got a monthly squeeze that fired 2 bars ago and a weekly squeeze that fired 5 bars ago. All right, so we've got potential tailwinds from those 2 higher time frame squeezes, both having fired long. Friday is my least favorite day of the week for adding positions. I'm going to add TAP today, and I'm also going to add Square, because I've had some positions, I've exited some positions. So let me just, I'll go through and talk about my positions now. So SLV pulled back a little bit. Oh, actually, no, it didn't. It was up slightly, but you know, it's kind of hugging the ATMA. It's probably due for a little bit of a pullback, but very happy with how that one's shaping up. AMAT I'm finally out of. limped out of that position at 40 cents. That was a bad trade. I mean, the real kind of damage on that one was done in one day when we had that fall, and kind of it lost 70% of its value kind of in one day. And there was, it happens in trading. Sometimes you get a big move and there's just kind of nothing you can do from that point. And that's what happened on that trade. Big Lots was better. It was up 1.9%. Not really an emphatic move. It is basically holding support here. But this is one I'm kind of getting a little bit bored of, to be honest with you. We've got earnings next week, next Friday, so let's see if we can get something together, and I'll be probably quite looking forward to moving out of that one. IWM was up a little bit, underperforming the other big indices, but moving in the right direction, see if we can get something going. XLC was better, that was up 1.7%. Obviously, Google is acting great here, and so is Facebook. So they're the two biggest stocks in XLC, and there's a bunch of other stuff like EA, which was also better. ATVI was also better. CMC is also in there, and so most of the kind of bigger stocks in that ETF are performing quite well. What else have I got? McDonald's. So McDonald's, not out of the woods yet. It's kind of still looking pretty meh. The squeeze firing short is looking like a false alarm at this point. I'm happy to give that one a bit more time. Tesla, I was able to exit my short put credit spread at 70 cents, which allowed me to lock in 50% of the premium. So you can see here, price didn't really do me any favors. It was all premium decay that kind of made that trade. But Tesla, I think, is probably looking pretty good here for a further bounce back to the mean. GLD was a little bit better, and this breakout is kind of looking more and more real. Be prepared for a pullback to at least the ATMA at any time, but this is certainly looking pretty healthy at the moment. INTC had a better session, that was up 1%. IBM, okay, let's talk about IBM. So IBM, the position expires today. My Iron Condor that I sold for $2.20, the mark on that was $1.36 as of Thursday's close. And again, that's just premium decay. That's just what happens when you sell short-dated options. It's also what happens when you buy short-dated options, which is why I don't recommend it. But I'll be looking to buy that one back in the first hour or two of market. I don't plan on sitting up all night to manage it. If I can buy that back for, say, $1.10 or $1, I'd be happy with that. Again, allowing me to capture 50% of the premium. Trades like this, they're not huge in isolation, but you get one of these, and you get a Tesla, and you get a Square, and it all helps add up to that 2.5% per week on your NLV, and that's how I think about it. SSL. Weakened further. It's sort of pulled back and closed on the 50-period simple, and I don't know, maybe my timing here was a bit off, but we've got the 8 under the 21. We've got a close right on the 50. It looks like the squeeze has fired in a bearish direction, so I may decide to pull the pin on this one fairly quickly. I've bought calls out to September, so they haven't been too beaten up by the price action, but yeah, this kind of recent price action is not super encouraging. So I'll probably give it another day, but if things don't turn around, that's when I'll be looking to hop out of early next week. LUV is a new position. So I bought the 16th of July, 57.5 calls at 471. They closed at 460, but you can see momentum has sort of just popped above zero. And from an MTF perspective, I think there are plenty of things to like about it. We're kind of green. Oh, we've just gone red on the 3-day. But I'm not too worried about that because we're in a squeeze on the daily, 2-day, and 3-day timeframes. Also, bear in mind, if we are going to see like a rally in, this kind of rubbish, you see ARKK was up 3.5% overnight. So if these types of stocks, which are, the ones we've been talking about at the top, the Twilios, the Pinterests, the Etsy's, the Pelotons of the world, we could see a bit of rotation out of things like XLI and XLF and yes, you know, some of those sectors that have just been on fire. But this rally in high beta junk, you know, it could go on for 2 days, or it could go on for 2 weeks. We just don't know. But I mean, if ARKK rallies, you know, into the middle of next week and gets up to this sort of level, that could be a really good kind of sell the rally type opportunity. And at that point, you know, the kind of the rally in junk could be over, and then XLI and XLF kind of regain their footing. And you know, we just don't know until we get there. But I do use ARKK as like the barometer for high beta tech, you know, in the same way that we might use triple Q as a barometer for mega cap tech. So we'll see what options expiration can bring today. We'll see if the market makers can push triple Q above 330 on the close and wipe out all of those puts. In my experience, the day of options expiration itself, you don't usually get huge moves in the index. You know, the index moves tend to be fairly muted, but we could certainly be setting ourselves up for a more bullish week next week. Quick reminder, next week is a full trading week. We've got 5 days. The following week is a shortened week with Memorial Day on the Monday the 31st of May. Anyway, that's all I got for you folks. Good trading. Have a great weekend, and I'll catch you next week. Cheers.